What is supply and demand? And should we really care about it in our investing journey? Hey there, El Fuego here, and thank you for coming back to the channel today. We're gonna answer those two questions in this video right now. So supply and demand, what is this abstract concept that you may or may not have heard of in the past? Is the idea of there is a thing out there, there's an item out there, there's something out there that people want to get a hold of. They want to own part of or some of this thing, whatever it is. For example, it could be part of a company. They want to own shares of a company, a piece of the company, because they want some of this company. They want part of this company, so they want to own it. They want to be a share owner of it. They want to be a business owner because they really value this company. These people are creating the demand for this company, the demand for shares of this company. But what does that mean? So they're increasing this demand. When a company goes on the market, when a company had the ability to sell part of its company in shares on the stock market, there's a specific or certain amount of shares that they've allotted to be sold to the public market. They have broken it down so there's only so many shares out there, whether it be 1 million, 1 billion, 1 trillion, it doesn't really matter. There's a finite amount of shares that are actually out there to buy for the public to be able to be a part of this company. Now, the more shares that are out there, the less percentage of the company that an individual will own. Simple math like that. You break it down to smaller slices of the pie, there's only one pie that you can get a part of. However, there is only a finite amount of shares that are actually out there. So there is a limited amount of supply out there to meet the demand that the people want to buy a company. And so when the demand increases, the overall supply of this company, the shares of this company, is going to decrease because people are continually buying the supply up and decreasing the supply. So therefore, the remaining supply that's out there, the remaining outstanding shares become limited. They become more scarce out there. So as a result, what do you think it does to the share price? It's going to increase the price of the share price because people keep buying it. So when people keep buying something, whoever has it and is selling it to them is going to increase the price of it because, hey, I just got $10 for this. Maybe I'll get 11 next time. Maybe I'll get 12 next time. Maybe I'll get 15. You know what? Maybe I'll get $100 next time. If the demand signals are high enough and they continue to go up, then yes, the price of that good, the price of that share, the price of that stock, whatever it is, will go up because people are willing to spend the money for it because their demand is so high. People want that piece. They want that thing. So when the demand goes up, the supply gets constrained, the supply shrinks, and as a result, when the supply shrinks, the value of each individual item becomes higher because the supply is smaller. The item is more scarce and more rare. So as a result, people can command a higher price for it because people are willing to pay the price for it. This supply and demand relationship between the two is honestly the biggest factor that drives the alternative investment space. And I understand really what alternative investment space because it really hinges on this and it can really make a lot of money. Check out this video right here on alternative investments where I dive into just what they are and potentially some ideas that you can think of for your investing journey. And I'll see you on that video.